Hello and welcome back to Crypto Clarified. My name is Vin Tran, Associate Director of Business Development at Wisdom Tree Digital Assets.
And I'm Davila Shinenskite, and I'm responsible for digital asset research at Wisdom Tree Europe.
And today we're joined by Benjamin Levit, co-founder and CEO at Bluechip, a stablecoins rating agency. We're going to be talking about all things stablecoin, ratings, safety, and how stablecoins will impact industries across crypto and traditional finance. Hello and welcome, Ben. Thank you for joining us today on the podcast.
Thanks so much for having me.
Yeah, absolutely. And talk about unconventional starts to crypto. I know your background is a professional poker player. We are coming off a stream of conferences where 2 weeks ago, I had the pleasure of being in Vegas for BTC Vegas, where I entered in a poker tournament myself. That was sponsored by the event, and I finished 7th out of 40th. But nowhere near as good as you, I'm sure. So would love to know more about your background, how you got your start into crypto, how did that build from your professional poker career, and yeah, let's get it going.
For sure. I mean, my poker career like ended 10 years ago, pretty much before I entered crypto, but it was also the gateway into crypto for me. So I started learning and playing poker right after high school, and actually moved on to doing it professionally, and it was exciting, kind of learning a lot about risk management. It's a very mathematical game. You really just have to focus on probability math. There's really not a lot of room for emotions, so quite similar to trading, I would say. And basically through a poker site that allowed players to basically withdraw their winnings in BTC, I discovered BTC, and then I just kind of got hooked on that, and on the idea of having a decentralized currency. It was very new, very interesting, and I think generally as a poker player, kind of being open to more unconventional things, at least at that time, I was very intrigued by the idea, and kind of learned a lot about BTC soon and as much as possible, and then kind of started, really kind of tuning down my time playing poker and only focusing on crypto. And now I'm like almost 10 years in the space. Started off with sort of holding educational courses in Austria, Germany, and Switzerland about kind of the basics of Bitcoin and Ethereum. I felt that education is something really valuable, and that kind of people are just communicating with each other to learn more. And that also was interesting to see when the market went up in 2017. People were more interested in it, and then when the first sort of more major mainstream bear market hit, then people also got less interested in this educational in these educational topics. I think that's also great that we're also now seeing less variance in that. It's more general interest there. But so back then I then started an e-commerce business which had nothing to do with crypto but taught me a lot about business. And then 4 years ago, after the Terra Luna crash, when a stablecoin combined with its governance token reached a market cap of around 60 billion USD and then crashed within a few weeks, my co-founders and I had the idea to build a rating agency for stablecoins, and that's when Bluechip started.
Amazing, amazing. And obviously, it's been such an unconventional path for you where you've gone from poker to all these different businesses, and then now you're doing stable coins. What drew you to stable coins from the shift? Because within crypto, obviously, there's so many different narratives. Obviously, after the crash of Terra and FTX, you mentioned, why stable coins and why now?
Yeah, I think it was really maybe similar motivation that got me into also holding these courses. I just feel like providing some guidance, some framework, some conversation is just helpful for the space. And I see and saw and still obviously see so much future and potential for the space. I still think we're just in the beginning. Um, and and I think ratings are an essential piece for sort of self-regulation of the industry and some sort of just maturity of the industry. And so I realized, okay, stablecoins are something that many people in the world use and need, especially Terra Luna was heavily used in high inflation countries, obviously a super attractive option to, have the dollar or the euro on chain just by having an internet access when you live in 200 or 300% inflation. So it makes sense that stablecoins are very attractive, and there are many different use cases as well. But seeing that so many people also got hurt by this, it felt to me like it really provides a lot of value to the ecosystem, and so yeah, this is kind of what drew me into stablecoin specifically.
And how do you rate stablecoins? Like, what does Bluechip look at to assess the quality of a stablecoin?
Yeah, so we give ratings from A plus to F. A plus obviously meaning that we think it's very, very unlikely that they would not survive a bank run, but we so far have not given out any A pluses. And then for Fs, we actually gave out 4 Fs so far, and 3 out of the 4 Fs have depegged at some point after our rating. And these letter grades are freely accessible to all users. That's important to us, that anyone in the world, especially people living in high inflation, can just briefly go on bluechip.org and check the grades. But then we have Bluechip Pro for the full reports, the scoring guidelines, and all the detailed information, which is kind of more of the due diligence process that is also mainly relevant to institutions.
And do you have different classification or different criteria for stablecoins that are, for example, Genius Act compliant to the ones that are not, for the ones that are compliant with the European regulations to the ones that are not? Like, how do you think about regulation in stablecoins?
So regulatory frameworks play an important role when we evaluate a stablecoin. It gives us some better idea of obviously how the stablecoin has to be set up or is set up. But we created our own framework, and it aligns in some cases with Genius or with Mica, but it's not directly, an essential piece. Also, an unregulated stablecoin or a decentralized stablecoin can receive a very strong grade. So we evaluated. It's part of the general process to know if a stablecoin is regulated or not. But we have some own guidelines that are also not required in all the regulatory frameworks, and in general try to apply smidge and then yeah, kind of see what happens. It's really like an objective framework that anyone can apply, so there's no room for emotions or subjectivity.
So on that objectivity, then, are you guys typically going to these different stablecoin issuers and offering a rating, like the traditional companies like Moody's and S&Ps of the world, or like how does that process work for you guys to then make these ratings happen?
Yeah, it's really mixed. Sometimes we approach the issuer, sometimes the issuer approaches us, and then we generally, sometimes all the information is publicly available, and we would not really need to engage with the issuer. Sometimes we, need to strongly engage, get information, potentially sign NDAs, and just make sure that we have all the information that is there. But obviously, in some cases, there, there just isn't enough information to actually um, give a statement on all topics or on all parameters. And if there's missing information, then that just counts as if it wouldn't exist, because generally we at Bluechip believe that all stablecoins should be as transparent as possible, and also as open as possible on their reserves, their governance systems, and everything. And so yeah, we kind of also try to push more safety and transparency by having the kind of Bluechip standard or these ratings there, so that um, yeah, we ultimately can give a good grade. But obviously there are issues as well that are just not getting good grades, which is kind of the point of a rating agency. If all stablecoins would be A pluses, then it probably wouldn't make sense to have ratings in the first place. But yeah, in general, we try to make sure that we also work with the issuer towards a safer rating if that's possible, and if that's also desired by the issuer. So if we tell them that they can do certain things to improve their grade from a B plus to an A minus, for example, then we've also had this before where we collaborated with an issuer to make that possible.
Got it. Got it. And I think as timely as ever. And I know we were discussing this before, but we're seeing so many new stable coins come to market globally, right? A lot of US denominated stable coins and other global currencies. Kind of a two-part question, but why do you think that is? in terms of this stablecoin summer that we saw last year, and what purpose do you think that serves in the future? Like, how do you see that developing?
So yeah, I think stablecoins are seeing such growth because there are just so many use cases that they're just really better than existing systems. They provide a great infrastructure for remittances payments, making them cheaper, faster. They're obviously a huge game changer for people living in high inflation. So this is slowly but surely picking up. Also, a lot of businesses are integrating them. Um, you know, really providing also internal processes that haven't been possible before. Large companies are using stablecoins to just make their operations cheaper and quicker. So I just truly think that this is just a process that we're still in the beginning of. I think stablecoins will be a equally as large topic in the next 5 years as they are today. I think they're just going to keep growing. At some point we'll reach some sort of peak or plateau where it's kind of there, right? Where everyone just accepts that they exist and it's just part of our everyday life and not just kind of more in the crypto bubble. But we're already seeing a lot of traditional finance companies, banks getting involved and using stable coins. One project that we, for example, follow in the EU, I'm based in Austria myself, is Kivalis, and it's a European stablecoin, or rather a Euro stablecoin that is issued by 12 banks right now. By the time they're launching, there will be many more banks being part of that. And so we see kind of the largest EU banks coming together to launch one Euro stablecoin. And that's just very interesting. And it's something that we, couldn't really have imagined a few years ago, or just wouldn't expect when this would happen. And since we're seeing this already now, I'm truly excited about the next years in the stablecoin space. Yeah.
Yeah, absolutely. And I think you're seeing a lot of similar developments here in the US as well. So to kind of build on that point, right? You mentioned institutional players coming into the market to build out these stable coins. You have legacy stablecoin issuers as well, and you have so many in between, right? How do we as an industry differentiate between these types of stable coins, whether it's use case, whether it is currency, but how do you see that playing out? Because there's so many, right? How do you think that develops?
Yeah, that's a very good point. I mean, part of that I would say are actually ratings when it just comes to safety, because I just don't see all these different types of stablecoins also being safe and being like, business models that actually work, and having governance systems that are safe or will hold potentially, right? So that's one thing. Like a way to differentiate is looking at the safety itself. But then, of course, depending on if a stablecoin is yield bearing or not, if a stablecoin which blockchain they're deployed on, or also where you can hold a certain stablecoin. So there will be a certain group of people that maybe would prefer to hold their stablecoins only in a bank, right? So then this stablecoin would need to be integrated with a bank and supported by that. Otherwise, there will be people that prefer to use stablecoins in the DeFi ecosystem and do lending and different other options. So they will have very different desires for stablecoins and certain use cases. So we as a rating agency focus on the safety aspect, but yeah, I think we'll see more and more stablecoins. We'll see more stablecoin diversification as well, and with that also, yeah, there will be more questions of this kind of when and which stablecoin should I really use for a certain thing that I want to do today, I want to pay or buy today. Yeah.
You made a number of references to safety. So, what are the key risks that most individuals do not even appreciate about stablecoins? Like, what makes stablecoins risky?
I truly think the kind of opaqueness of some of the governance systems and the management teams behind stablecoins is really what people don't look into, don't understand, or just don't know. And these are really the key risks. Also with Terra Luna, people didn't really understand the stability mechanism and what even an algorithmic stablecoin would be, and they didn't even really look at it. They just looked at the market cap and saw that it's big and it's being used, And that's why, for example, market cap also is not a factor in anywhere in the Smith trading framework. A 10 million euro or dollar market cap stablecoin can be much safer than a $10 billion market cap stablecoin. So it's really about the structure and also regulation in some cases and the management team and systems that are in place to safeguard the stablecoin and make sure that not just a few people can really turn off a stablecoin too easily or have sort of negative incentives. And these are a lot of things that as a general user you would just never really see.
And are certain blockchains more suitable for stablecoins than the others? For example, when I talk to investors all across Europe, I highlight to them that Ethereum has a big market share of stablecoins. So is there anything that makes Ethereum blockchain most suitable for stablecoins, or do you see other blockchains catching up and potentially taking over?
Yeah, I think that there are two considerations for the underlying blockchains, or two main ones. One is the cost, like where is it the cheapest to transact stablecoins, and the other one again is the safety, right? So for Ethereum, it's kind of the largest decentralized network for the stablecoin users that we're seeing, and so when you really care about having the safest possible transaction, Ethereum is probably should probably be your choice, and that's why we're seeing kind of almost 70% of stablecoin usage on there. But then there are also people using Tron because it's very cheap. That just want to make sure to have some sort of micropayments infrastructure or kind of tool for them that they can use to make a lot of smaller transactions maybe or buy things that are maybe less pricey. If it's like $1 that you wanna spend, you really care a lot about the fees. Whereas if you transact $1 million, then safety might be more relevant to you.
And you talk about people making payments for using stablecoins, but now there is more and more talk about AI agents doing payments via stablecoin rails. What do you think about that, and how will stablecoin ecosystem evolve to make AI economy more suitable?
I also truly think that the kind of agentic e-commerce space will heavily rely on stablecoins. I think they'll just have wallets and not directly be linked to your bank account. And then having a wallet using stablecoins would be the way to go here. So I definitely think this whole agentic space will again provide a very large push in stablecoin volume and market cap. So I agree with these people that are also of that opinion for sure.
And you mentioned a few different use cases earlier, remittances, payments as another one that we just talked about. What other use cases are you seeing in your space for these different types of stable coins? And along those lines, what industries do you think will be impacted first from the adoption of stable coins?
I mean, the savings aspect is something really interesting. Obviously, if there's a way to earn some yield, whether it be some stable coins that are also backed by potentially tokenized real world assets, this is an area that I think will be growing a lot as well. If you have the option to hold your savings in a stable coin that is kind of inflation proof in a way, that's obviously a huge game changer for regular everyday users. So I think this is a use case that will be very relevant, and in the future, I think people are seeing that inflation is an issue in general more and more in the last years. I think like 10 years ago, it was less of a topic, as 5 years ago, inflation rates were higher. Also in 2023, we saw a lot of or large increases in inflation rate, and people are feeling that, of course. So I think the savings kind of era will potentially change and be revolutionized by stablecoins and certain designs. And yeah, when we look at industries, I think like the main industry, the kind of first large change there will be the banking industry. I do think banks are more and more integrating and also truly understanding the importance of stablecoins and how they can improve their offerings, their businesses, and their operations. So by projects like the one I mentioned before in the EU and many other ones around the world, we heavily see kind of the banking industry really making big changes by launching or integrating stablecoins.
Amazing. And do you think the European regulatory framework is set up for the success of this? And how does that differentiate than what you see in the US?
I think both the Genius and Mika regulation are good starts, kind of good kind of kickoffs. They still will evolve and will kind of adapt alongside all the new stablecoins designs we'll see. I think a large topic is obviously yield, right? So both the Genius Act and the MiCA regulation are not um, making it making yield stablecoins a thing, and so this is something where I do think we'll see some changes and where I don't think we've kind of found the perfect solution yet. Also, when we look at decentralized stablecoins, this is not really a part of MiCA. It's mainly focused on these large fiat-backed stablecoins that we're currently seeing, which obviously have the largest market share as well. But I strongly believe that decentralized stablecoins, and we've rated some decentralized stablecoins also very safe. So I do think that this is a space that will be growing, and I do think that this is also an area where the regulatory frameworks will adapt and kind of have to adapt.
Yeah. And so outside of regulation, then obviously I think stablecoins have been adopted pretty broadly across crypto natives, and you're seeing a lot more traditional institutional players come into market. Talking about broader retail access and adoption, what other barriers are you seeing?
I mean, on the topic of decentralized stablecoins, actually, um, the regulatory frameworks, they have some very specific guidelines, and that's also something where decentralized stablecoins are kind of being pushed, right? Because be people are seeing, well, if I launch a decentralized stablecoin nowadays, I can actually, you know, um, build something that is not impacted by some regulatory frameworks, and I can actually build a design that build in a design that I think is best, or that I want for my users, or in general to be there and to deploy. And so when we look at barriers, I also think regulation kind of comes in here, in the sense that there are a lot of businesses that maybe have used stablecoins in certain ways that which may not be possible yet, which again would be yield bearing. I do think it's a topic where we kind of have to ask ourselves, does it make sense that stablecoin issuers are making this kind of risk-free money while users are kind of just being able to use or kind of receive the digital copy of a dollar on chain, right? So the more and more people will get kind of more familiar with on being on chain or using the blockchain, I think people will want to have more ways to also gain more yield and use DeFi products. And this is a barrier that we kind of have to overcome, that people are also getting access to yield through for certain products, and also doing that in a safe environment, and also making sure that people know about this, and that people kind of really can learn about DeFi. Really, I think that's really a big barrier where most of my friends would probably not totally understand, how to actually be a part of the DeFi ecosystem that the crypto world is actually using, and that's creating a lot of opportunities and value as well. And I think DeFi is also really just growing, and also a huge playground for stablecoins and a huge network.
Let's go back to Bluechip. Like, what does success look like for you over the next 12 to 18 months? What do you hope to happen, and where do you hope to be involved over the next, year and a half?
With Bluechip, we've kind of always waited for this moment that ratings or that stablecoins are growing and therefore ratings become more relevant. And we do see this already. Especially the traditional finance companies are very interested and truly understand ratings and the importance of having these guidelines and these frameworks in place. And so I I see and also hope that this stablecoin space is just maturing more and that ratings really become a standard, and that's also what we are building at Bluechip to make sure that this standard can align well with the regulatory frameworks that are in place, and also that they provide true value like we see in the banking credit rating world. Ratings are an essential piece, and I do think the stablecoin space is going into that direction as well. If that's already happening in the next 12 to 18 months, that's kind of the big question, but it's already starting. I think like the big click could come when the regulator would require stablecoin issuers to get a rating, like we see in the banking credit rating world. But even without that, this self-regulation of the industry is so important, and the more stable coins we see, Vin, to your point earlier, the more the different stable coins that we see in the market, the more and more people will be looking at differentiators. And if you have 30 micro-regulated stable coins in the market, or 30 Genius Act regulated stable coins out there, you will want to understand the differences. And so as we're seeing more companies issuing stablecoins and more stablecoins in general coming into the market, that's where we really want to focus on the next 1.5 years with Bluechip to provide that independent source of truth in a way, and provide that differentiator.
Independent source of truth is of key importance in every aspect of life. And if Bluechip succeeds and grows beyond your expectations, what impact do you think it will have on the whole stablecoin ecosystem?
I think that stablecoin issuers, if Bluechip succeeds in the way we imagine, will be way more open to being more transparent and also having standards that are maybe beyond what's needed. I really think as an issuer, you have a lot of responsibility managing savings of people, managing a large treasury, and yeah, just providing a safe, transparent product is really the most important thing here. The damage that the deep hacks, and obviously the biggest one with Terra Luna, has done was immense, and so that's really what we want to prevent with Bluechip, and also kind of push for issuers to really take very seriously, and make sure that for them a safe Bluechip grade is of big importance.
And to kind of add on that, as an independent source of truth, do you see, we talked about decentralized stablecoins versus now more of the banking stablecoins tied to banks. Do you think these two types of stablecoins can exist and can coexist?
Yeah, I definitely think they can and will coexist. Depending on a user's preference, they will prefer one of the other. There will be people that would potentially never touch a stablecoin issued by banks, and then the other way around as well. So I think both designs make sense if set up safely, for sure.
Yeah. And then this is a little harder and more, I guess, forward thinking in the future, kind of going back to Deville's point. But are there any trends within stablecoins that you think people aren't paying enough attention to?
I think the biggest trend that I would mention here is really the tokenization of assets, and that being a part of stablecoin backings, really. So I think the fact that, Larry Fink is saying everything will be tokenized shows where the space is going. and having tokenized real world assets like real estate and stocks and gold in your stable coins backing rather than maybe just treasuries of your currency is a huge trend, in my opinion, that we'll see when we really think about having a stable coin that is more inflation proof than it is now. Because obviously now having a dollar or euro backed stable coin is just as inflationary as your fiat currency. So I really think that this trend will be the next big thing that I'm potentially or I'm personally looking forward to, because I truly think it provides just so much value to be able to also send tokenized real world assets through the world pretty much, right, on 24/7 with very low fees that has not been possible with real estate before, right? So having that in a form of a stable coin is really exciting. And I think this is a trend that we'll be definitely seeing in the next, let's say, 5 years.
Got it. And I couldn't agree more. What we're very focused on at Wisdom Tree, particularly in the US, is what you mentioned, the tokenization of different types of assets. And we see different types coming on chain every day, from private credit to real estate. And I think the most interesting dynamic is obviously the growth of both. And it seems like a very parallel track, right? Where you see all these different types of assets go on chain. And at the same time, you're seeing the stablecoin growth, um, obviously being on chain. Can you connect the dots for us and paint a picture of how that looks from an interoperable world, right? Where you have all these different assets on chain and then you have all these different stable coins on chain. How does that change how users interact, how users transact?
Yeah, I think both are really well sort of working together and compatible. So you can have a stablecoin that is backed by a variety of real world assets. You have to have a mechanism that's obviously in place to make sure that that is managed properly so that the stablecoin can maintain its peg and stability. But generally speaking, it really allows us to be able to have, first of all, potentially a savings account that is very easy to manage and much more inflation proof, or potentially appreciates value over time. And so I do think we could kind of live in a world, or kind of to paint this picture where, if you're receiving your salary, you would actually not have to kind of invest it or save it in a certain way, and also have to become a professional investor in a way. You could just, just save your money as many recommend, and then actually also be able to buy somewhat of the same things that you could do today, like in 10 years. So that's kind of, I think, that would be a big win for society if people would not have to care about how they actually then invest their salary after they're maybe working in a completely different job that has nothing to do with investing, and just having your currency actually be more inflation proof, and maintaining the purchasing power over many years is something that I think this interoperability could allow.
You highlight a very interesting point, and actually, as I was listening to you speak, I was thinking, if stablecoins grow to the scale that they are forecasted to grow, do you think that most stablecoin users will realize that they're using something that's built on blockchain, or will they become just as standard as currently credit card payments or cash payments are, and just one of the things that people stop worrying about how they are actually operating?
Yeah, success for stablecoins probably really looks like people wouldn't really notice that they're using any different technology. They maybe just use their phone or a card to pay somewhere or save, and that's pretty much it. So yeah, I agree that the UI is really everything for adoption, and yeah, same as today, as we also are using our phones and internet and websites without really understanding the technology behind it for most people. I think the same will be the case for stable coins, but still um, having a better understanding and being a more dedicated user can allow you to potentially use DeFi or tools that allow you to earn more or to make more of this technology in a way. But yeah, true worldwide adoption will probably rely on that not being the case.
And I think this is a brilliant point to close on. Education is key if you want to make the most out of the items that are in existence and the items that are being developed. Thank you so much for a brilliant discussion, Ben. It was really, really insightful.
Thanks so much as well.
To clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and Bluechip and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.